We'll come on to some of the stimulus measures in a sec, but the fixing of the yuan weaker than 7 today. How is the market going to interpret this? Is it simply that 7 is not such a psychologically important level anymore for the PBOC?
I think that's right, but the currency is likely to be another pressure valve that the authorities in China will use to try and offset some of the economic impacts of this virus. So we're seeing a slightly weaker currency, we're seeing lower interest rates, cuts to the benchmark rate. On the fiscal side, we're seeing acceleration in local government bond issuance, and they're also doing targeted measures, as we just saw there, to try and impact the businesses and regions that are most directly impacted by the virus. So we are getting quite a comprehensive policy response to this, and that's obviously what's encouraging markets here.
Yeah, for the moment, I mean, we did have some sort of withdrawal of liquidity yesterday, leading some to question whether the stock rally has much further to go. In terms of how you would sort of trade this right now, and the assumption in the market is what it seems that there's going to be a V-shaped recovery. Do you put on tactical trades to reflect that?
I think the V-shaped recovery is where most economists have this kind of scenario ending up. They're using analogues of previous epidemics like SARS. Even though there are some major differences, the concept that we should get a pretty healthy rebound from this, as it will be concentrated to one quarter and the consumption will ultimately rebound, that's a pretty robust, I guess, assumption to make. But what investors are very unsure about is the depth of this drawdown and also the timing around it, because the cases are starting to slow, but this sort of economic impact is very difficult to model. We don't know how much this is spread outside of the US, outside of China, into other regions like the US and the rest of Asia. Until we get a better handle on that, then it's going to be difficult to know exactly what that impact will be. So for the moment, there's still a reasonable amount of risk aversion if you look at where interest rates are trading.
Yeah.
If you look at risk premium in various different assets, certainly those that are more cyclically exposed, like energy markets, commodity markets, they're still pricing in a reasonable amount of downside, we think, that could snap back if we do get this recovery.